What's up, guys? Welcome to the Momentum Trading Lab. I'm your host, Renier. If you haven't already, please consider hitting that like and subscribe, and let's get into it. All right, so today I'm going to start with the dollar first on the daily chart. So if we have a closer look at the Momentum Master B, you'll notice that the oscillators are starting to get a little bit overextended. But saying that, if we have a closer look at the price action, and we go back towards the 6th of July of this year, you'll notice that we have these relative equal highs right here, and then we have a high right there as well. So this is an indication that there is buy stop liquidity above these highs. And as we know, the algorithm tends to move towards these liquidity pools to knock out the traders that still had their stops above these highs. So let's mark that as our buy side liquidity. So on the daily chart, it definitely seems like price action is currently moving towards this liquidity pool that we have right here. The only reason that I currently see the dollar first going down and then taking out the liquidity is this imbalance that we have right here. So this is our fair value gap on the daily chart. But right now, to me, it seems more likely that the dollar will move up into this area to kick everyone out and then come down to rebalance this imbalance that we have in the chart. And then if we look below, there's another, there's equal lows right here. So let's copy this line. And we will call this our sell side liquidity. And let's just have a look to see if there's any other inefficiencies in the chart. We have one right here, but price action came in and then left it. So technically that should be rebalanced. But I'm just going to keep it on the chart. Sometimes these old imbalances still matter. So I'm just going to leave it there so that we know it's there. So we are looking for the dollar to go into the 103.5 range and then get rejected, and then start to move down towards this imbalance, and then the sell side liquidity below these lows, and these lows are at 101.742. Right, so that's the daily chart for the dollar. We'll see that there's a bit of a, looks like a bit of a divergence on the stochastics RSI. So everything is overextended on the dollar, on the Momentum Master B. But like I said, I think the draw on liquidity for the dollar is above these highs, and then this imbalance and the sell side liquidity right here. Quickly see on the 4-hour if there's anything of note. Okay, so we had an imbalance right here. Just gonna put it on the chart. I just want to see if price action came into it and then left it, because it came in and left it a couple of times. So this is a good example of an inversion fair value gap. So right here, there's just a normal SIBI, they call it. So this is the sell side imbalance, buy side inefficiency. So it kind of acted as resistance right here and right here. But then the order flow flipped to bullish order flow. And you'll see it flipped this as an inversion fair value gap. So that's when price action moves through the fair value gap and then kind of tested as a support, like we are seeing right here. So on the 4-hour, this is still a bullish market structure with a shorter term high right there with liquidity as well. So like I said, on the daily chart, it seems like the dollar is moving towards this area right here. And on the 4-hour chart, the market structure is still bullish. And then if we have a closer look at the Momentum Master B oscillators, the stochastics RSI, the MACD is pointing to the upside, as well as the Williams. So it seems likely that we move up to go and take out the liquidity in that area. So look at the 1-hour. Not the nicest looking price action on the 1-hour, but still we have a low, a higher low, a higher low, a higher low, and a higher low. So that is still bullish market structure. Then we also had relative equal highs right here, so it's currently moving towards the local liquidity pool right there. 1 hour is starting to get a bit extended, so we also just have to monitor this low right here. So this is also a low because we have higher lows on either side of this candle. Sell side. Cool, so that's marked off. So the reason I'm marking this off is a lot of the times, even though the draw on liquidity is to the upside, it will a lot of the times just grab this local liquidity pool and then move to the upside. So this could be a potential long opportunity if you are trading forex. So if we dip down into this area and we displace out of it, for instance, displacement on the 15 or the 5-minute chart, then you can potentially look at a long position and then play it towards the buy side liquidity at 103.5. All right, I think I'm not going to spend too much time on the dollar. I think it's pretty straightforward. The draw on liquidity in my mind is towards these relative equal highs, and then after that the draw on liquidity will possibly be this imbalance and the sell side liquidity that we have below these relative equal lows. All right, so that's the dollar. If there's any questions, you can pop it in the chat and I will get to it at the end of the stream. Alrighty, so before we go to the Nasdaq analysis, I'm just gonna quickly pop on Forex Factory. So we do have the FOMC meeting minutes at 2 p.m. Eastern Standard Time. That is in about an hour and 40 minutes. And as you can see, it is a high impact event. So definitely take note of this. There might be a bit of volatility in the charts around that time. I already hit the New York AM session. So the setup is gonna have to look really good in the PM session for me to open up another trade. Let me quickly show you guys. Okay, so this is just my Ninja Trader. So this is how I trade my funded accounts. So the only trade I've taken today was just a single contract. I bought it on this candle, closed it on that candle right there. That was about 53 points. So that was a nice little AM session scalp. And the reason I took this trade was, if we let's quickly go back to trading view. Go to the Nasdaq. Okay, so this was this little move right here. So what I did was, so for my trading model, I want to see price action take out some sort of liquidity pool, so an old high or old low. So we had sell side liquidity right here, and then at around the open we came down, we tapped into that liquidity, and then we displaced out of it, right? So you can see this was a nice energetic move above the previous high. So if I remember correctly, I looked at this high. So if we just zoom out a little bit, you'll notice that for this piece of price action right here, this was a bearish market structure, right? So we were continuously making lower highs. This was the very last lower high. Then we got the liquidity grab. Then we displaced. This wasn't quite displacement. That's why I only went in with one contract. It did not. There was one item missing from my checklist. So normally I want to see a fair value gap right here. So this was a riskier one for me. But we got the market structure shift. So price action moved above this high, market structure shift. Unfortunately, in my trading plan, I want to see displacement on the 5-minute chart. So on the 5-minute, I want to see this fair value gap. But for this one, we didn't have it. So I just kind of bended the rule slightly and I went down to the 2-minute. This is a time frame that I use a lot. And over here, we had the displacement, right? So a fair value gap is a 3-candle formation. And it's the area that was not traded through. So for this 3-candle formation, the fair value gap was like that, right? And then I also used my Fibonacci tool. So normally I want to see that displacement below the equilibrium in the discount area. And so what I saw was we came down and we started printing this candle right on the OTE, the 705 or the 706. And then I opened the trade and I was just targeting the low hanging fruit. So I was monitoring these highs right here. And that's basically where I sold right there. So if we go back to Ninja, you'll see this is also the 2-minute chart. So this is why I entered in this candle off the fair value gap and the Fibonacci OTE. Closes right there above these highs inside of the buy side liquidity. I saw we were losing momentum, so I just closed the trade. So that's a little bit of experience coming into play. Initially I was targeting this high, but I could see, okay, we are starting to lose momentum right in the buy side liquidity. And then the other thing that I noticed on the chart was it on the 5-minute? Yes, it was on the 5-minute. Let's just clean this up a little bit. So on the 5-minute, we had a stubby fair value gap. So a sell side imbalance, buy side inefficiency. So as you can see, we came right into that area. That's about where I closed my position. And then it started to reverse to the downside. I had some other stuff to do around this time, so I didn't get into this nice short. But that would have been pretty nice. See how many points that was. Geez, about almost 120 points. That would have been pretty epic, but I'm happy with my trade. I made 53 points, one trade. So that's, if I don't even get another setup today, I'll still be pretty happy with the day. All right, so I'm just gonna delete everything on the chart. Let's start fresh. On the daily chart. Okay, so what I like to do on the daily chart is just to mark off the previous day low and high. And we're just gonna copy this line, mark this as our previous day high. And then the other thing that I want to do is just find the 830 price. 830 was right here. Okay, so this is the 830 opening price, and I know according to the stock market it opens at 9:30 in New York, but this is actually the opening price for the algorithm that delivers price. So this kind of acts as a mean. So under ideal conditions, when we are below the 830 opening price and we are bullish on the daily chart, then we'll be looking for longs. If we are bearish on the daily chart and we are above the 830 opening price, then in the ideal conditions we will be looking for short positions. So it's just always good to know where we are in relation with this 830 opening price. And if you trade the London session, you can use the midnight opening price, and that is always in New York time or Eastern Standard Time. Okay, so we have those two levels on the chart. Go back to the daily. Okay, so let's see. So okay, so we had this low right here. We've been digging into that liquidity. We have some more lows right here. It looks like we are taking them out right now. And then like we said yesterday, we are starting to see the Williams reset with the stochastics. And the last time we had the same conditions was right here, and then we had this nice bullish run, which was obviously, how many points was that? About 4,000 points more or less. Okay, so let's go to a lower term time frame. The daily is not giving me a lot of reads right now. All right, so we had these relative equal lows right here. Mark that as EQL. Okay, and then let's also put a horizontal line right there. Okay, so we are basically in that liquidity pool right now. 4-hour stochastics is resetting. The Williams has a little bit left to go, but I can start turning on the next 4-hourly candle. Okay, so we are in sell side liquidity. Also at this low again. Okay, and then we have to mark off these highs. Okay, so because we are below the 830 opening price, we are in a sell side liquidity pool. I'm going to be looking for longs in the afternoon session, but what my personal plan for today is to wait for the FOMC meeting minutes to come out, and then I'm just going to see what happens, let it play out, and then I'll probably look for setups between, let's say, 2:30 and 4 o'clock. That's my personal plan, is just to let things settle down, and then I'm gonna potentially jump into a trade. But I'm still open to, if something presents itself before the FOMC, then we can look at that as well. Okay, so go to the 5-minute and see if there's a shorter term high. Straight to the sell side liquidity. Now what I would have liked to see on this 5-minute chart is just somewhere more defined lower high for a market structure shift, because that is not. Let's have a closer look. So technically there's no lower highs right here. For a technical lower high, you must have lower highs on either side of the candle, so that technically this is a high. But then if we look at price action right here, it just basically went straight down. I'm gonna be keeping an eye on this on the 2-minute. If you go down to the 2-minute, we can look at this high as a potential market structure shift. So what we want to see is strong displacement above this level. So ideally, I like to see that fair value gap print on the 5-minute as well. That gives me a strong indication that this is strong bullish order flow. And then we just simply wait for price action to retrace into that fair value gap for our entry. And ideally that entry will be below the 0.5 on your Fibonacci, right in the discount range. And then just have a look right there, a relative equal highs as well. So that is a pretty good draw on liquidity and a target for your long position. And then the next target I will aim for this high and that high right there. Okay, I just want to go back to the 4-hour and just see if there's any. So if this does not play out, if we do not take out that lower term time frame high on the 2-minute with displacement, then it seems like we are going towards this low, which is at 14,854. But I think that is it's more likely we see a little bit of a move to the upside for the PM session, considering we already took out yesterday's low and we are below the 830 opening price. I'm currently looking at for the afternoon session. If you are not in the Discord, get the link in the description. I will keep everyone updated as this changes, or if anything changes. Alright, we have smart data in the chat. I hope you guys are doing good. Let's have a look at ES. So what I'm gonna do is I'm just gonna add an alert on this line. So while we look at ES, if we get that market structure shift, we'll come back, we'll see if it printed that fair value gap that we want, and then we'll start putting together the complete trading plan. What I'll do is I'll quickly just show you guys my trading model. I'm just gonna quickly open it here on the other screen. Okay, so my scalping strategy is super simple. So the first off, we just need to be in a kill zone, so ICT kill zone for the New York session. You can go read up about that. It's very simple. So if we are in that time period, that's the first condition. Then we need to take out a liquidity pool, and for scalping, I like to use the 1 hour and the 15-minute for the buy side and sell side levels. That's basically the only thing that I use those two time frames for, is marking off those levels. And then basically I go down to the 5-minute chart and I wait for after price action went into the liquidity pool, then I wait for a market structure shift on the 5-minute. I want to see displacement on the 5-minute, so that fair value gap. And then if the fair value gap is in the 0.5 retrace, so for instance, if we want to go long, we want to see the fair value gap in the discount range, then we can enter on the fair value gap. If the fair value gap is not in the 0.5 retrace, for instance, let me just quickly grab an example. All right, so let's say this is your impulse, right? There's the 0.5, your equilibrium. If the fair value gap is formed above the 0.5, then you enter on the 0.5 and you'll stop right at that low. And then is there at least a 2-to-1 risk to reward ratio to TP1? And I normally use the negative 0.27 as guidance, as well as the negative 0.62. And then if all of those conditions are met, then I enter the trade and I just log everything. So ideally your trading plan should be able to fit on the back of a small business card. So everything should be nice and simple, especially when the market is fast. It doesn't help you have a super complicated trading plan. Everything should just be as simple as possible. And with that strategy, I've backtested that strategy with more than a year's worth of data on my FX replay, which is an awesome backtesting tool, and it's got a pretty high win rate. You can test it yourself. It's very, very simple strategy. Let's have a look at ES. Okay, so ES also below yesterday's low. Let's just copy that line from the NAS. Okay, so we are below the previous day low, took out the sell side liquidity below that low. This is yesterday's high. All right, so we are still, let's quickly mark off this fair value gap. So the daily is still holding the gap. Quickly get a fib on this. Dipping below that 0.79. Don't particularly like that. Okay, let's move that to the side. Okay, let's quickly, I just want to go to a lower term time frame and mark off the 830 price. 830 was right here. Okay, that's our 830 opening price, so the algorithmic opening price. Okay, so let's go to the 4-hour chart. Okay, we are on the 4-hour chart. Okay, so on the 4-hour we can see that we came down, took out the local sell side liquidity. We have a pretty big imbalance right here. Let's mark this as 4-hour. Okay, so considering we took out the liquidity below the sell side liquidity, we have some relative equal highs right there as well. So this is our liquidity area. Copy this. Put it up over here as well. Right, so we have buy side liquidity right into that 4-hour fair value gap as well. Okay, let's just quickly look to the left and make sure that we did not miss any significant lows or imbalances. Nothing right here. All right, so if we don't break bearish market structure on a lower term time frame, then it's also likely that we gravitate towards the liquidity below this low, which is at 4,411. Let's quickly have a look at the 1-hour chart. All right, so at least on the 1-hour chart, we did not displace below this low. So that gives me confidence that this is a sweep of the liquidity and ready potentially for higher prices. Want to see a stronger move out of here. Okay, so the level that we are watching for a market structure shift is this one right here. On the Nasdaq, we did not get this high on the 5-minute, unfortunately, but we have it on ES. And then we just have to be wary of this fair value gap. But if the draw on liquidity is to the upside, then most likely this will act as a inversion fair value gap, where it will kind of consolidate inside of it, maybe dip below, then break through and then come down and kind of test this as support and then continue to the upside, because we have these equal highs right there. So we know there's going to be stop losses in this area. And then, like we said, we also have a high on the 1-hour right there and right there, as well as the 4-hourly imbalance, which is right in this area. So why do I think it's going to go up? I'll just quickly recap. price action dipped into the sell side liquidity, but we did not displace below this low. It just looked like a liquidity sweep. You can see we didn't, it's not a strong move with displacement below this low. So now we know that the sell side liquidity has been taken. Now we want to see displacement above an old lower high, which we have right in that area. Where did I draw that? I must have been on some other time frame when I drew this fair value gap. I'm not sure on which time frame that was. That's strange. Okay, nonetheless, we have this lower high right here. So if we displace above this level, then the long setup is on. Then we can wait for that retrace into a 5-minute fair value gap, and then we play it towards the buy side liquidity above these highs, and as well as that high right there. Right, so that's basically currently my plan for the rest of the day. I am going to be careful with the FOMC. I'm just going to see what happens, and then as soon as the dust settles, then I'm going to be looking for more setup. But if this presents itself before the FOMC, then I will potentially just take a quick scalp before the FOMC and then let everything play out. Alrighty guys, I think that is it for my analysis for today. If you want to learn how to trade, if you want to learn these concepts that I use, you can get the information in the description below. So the concepts that I teach is SMC, which includes but is not limited to the market structure, fair value gaps, order blocks, optimal trade entry, understanding liquidity concept, time and price theory, daily bias, and my scalping strategy. Then I also have a strategy using mostly the momentum master indicator, one for swing trading and one for scalping on the very low time frames like the 1 minute and below. How to use cumulative volume delta and open interest, risk management, and how to use Fibonacci. And then also join the Discord, it's free. The link is in the description. I also pinned it at the top of the live chat. And then if you want to get the momentum master indicator, we currently have a 20% discount if you use my link and coupon code. Alrighty guys, I think that's it for today's analysis. Thank you guys very much for joining today, and then I will be back tomorrow at around the same time. So thank you guys very much, and I will see you guys in the next one.